Tesla stock at one point today was up about 3%. Now you're only up a half of 1%. What happened and what do you need to know? We actually have quite a few pieces of really good news for Tesla. And I do think this 3% rally we seen in the beginning of trading is just a precursor to what is to come and a potentially much larger rally. First up, you have this article from Barron's that says Big Fund says no to Musk's pay, but proxy advisor says yes. Tesla stock is up. This is actually citing news that we reported here on this channel yesterday, and that was the California Public Employees Retirement System. Well, their CEO came on CNBC last night and said they're going to vote no as of right now for Elon's comp package. But offsetting that bad news yesterday was this. Edgin Jones, the third largest proxy service, says to vote yes for this proposal. The largest proxy voting service, ISS, has not commented on whether or not they plan to recommend a yes or no vote for Elon's comp package. So I think that will be important for Tesla stock when that news does come out. Next up, Reuters is reporting that Tesla is preparing to register its full self-driving software with authorities in China in the run-up to its planned rollout of the technology advanced feature this year. This Reuters piece goes on to say the US electric vehicle maker is also considering selling the software as a monthly subscription to users of its cars in China, its second largest market. Over the past couple of quarters, we've seen more deliveries in China than we have in the US. So very quickly, China is becoming the most important market for Tesla. A successful software registration with China's Ministry of Industry and Information Technology will pave the way for Tesla to internally test full self-driving by having its employees drive on China's public roads before delivering it as an upgrade to its Chinese users in the coming months, said two of the people. The company currently offers less advanced versions of its autopilot driver assistance systems in China already. So all of this is seen as really good news for obvious reasons. Offering FSD as a subscription service or just to buy it in a one-time kind of lump payment is obviously going to be very accretive to Tesla's bottom line and help boost EPS and overall profitability. China can be a huge market, and I would argue China probably will have better take rates than even the US, probably upwards of 20% or more. But even in the longer term sense, getting robotaxi into China could be much larger than the US, especially considering in China there's a lot more apartments and maybe having a vehicle wouldn't make as much sense as it does here in the US. A vehicle of your own, that is, and maybe robotaxis would really appeal to one, the tech savvy nature of centralized, Chinese populations, right? City center populations, and also again might save them money. It might be a best of both worlds for everyone. That would obviously benefit Tesla and your investment in Tesla. Sawyer Merritt reposted this post from Holmar's catalog on X. Holmar's catalog basically said that this pay package only gives Elon the right to buy about 304 million shares of Tesla stock at $23.34 per share, on top of potentially giving Tesla another $7 billion and bolstering their balance sheet if Elon did exercise all of the options. Elon can't even buy these shares or exercise these options for 5 years. That's what he says here. Elon responds and says that is a crucial point. The shares cannot be sold for 5 years, so it is impossible to cash out. So I guess in other words, even if he does exercise his options, he can't sell the shares for 5 additional years. In other news, the Tesla Semi will be presented at the Commercial Vehicle Exhibition in Hanover, Germany. This is the first time the truck will be shown in Europe. And the Tesla Cybertruck performed surprisingly well on an autocross event. Volkswagen dealers say the ID.7 wouldn't be competitive in the US. Porsche is now hesitating on their pre-planned plan of building a battery factory in Brandenburg, where Tesla's Gigafactory Berlin is located. Quote, the problems in China and the weak demand for EVs in Germany in particular are causing the company's strategist to defer. Redwood Materials, founded by Tesla's co-founder J.B. Strobel, has been named on Time's top 100 most influential companies of 2024. Apparently, the 2024.14.8 version of Autopark that is now being distributed in Taiwan perfectly performs parallel parking, which is something a lot of people can't do by themselves. Tesla vehicles are arriving at a port in Belgium and are being moved for delivery to customers. And look at this. Zhang, a party to the Shanghai Auto Showcase on April 19, 2021, also lost today's ruling. The woman is required to pay Tesla 170,000 won along with a public apology because she violated Tesla's reputation. Zhang did not provide any evidence that the brakes were broken, according to the court. Tesla China officials said it was difficult to say when the FSD would be released in China, but said it could launch quickly in the not too distant future. They also confirmed that Tesla's usage restrictions are being lifted in various parts of the country. Tesla Chan believes this means that FSD could be introduced in China in the month of June. What's pretty interesting about Tesla today and the broader markets even, if you take a look at IWM, for instance, your small cap stocks, that index is up about 1.26% at the time of recording this video. This is great, not because we had call options on IWM bought yesterday. You got to take your opportunities when you can. Link down below in the description of this video if you guys would like to join the trading community. But it's actually pretty interesting because you sold off at least yesterday, and you really sold off for the last week or two for the Russell. You're heading into your big catalyst this Friday. You're better priced now for your PCE report on Friday, and maybe that could lead to a further rallying of the markets. Now, typically Tesla kind of correlates to small caps because in a lot of respects, they're pretty similar, at least being interest rate sensitive. But you are seeing Tesla stock that fell from that 3% rally today. And I think a lot of that is there's still going to be a lot of anxiety heading into June 13th. And I think you will likely continue to see a lot of those deep in the money puts that continue to be bought. These hedge funds and institutions, anyone with a large position that wants to hedge out their position, they're going out, they're buying the 260 to 275 puts. That means there's like 0.2% to break even on the downside. Basically, if you're buying those options, you're fully hedging out your position, and a lot of those expirations are for July 21st. So just after the July 13th shareholder meeting. Well, what happens when you see a lot of those deep in the money put options that start to be bought is market makers, they have to go out and instantly hedge that position. So they have to instantly go out and start shorting Tesla stock. So as more of these funds go out and hedge their Tesla position, there's more shorting market makers have to do, and that temporarily puts a lid on Tesla stock. And I think when you did get that 3% rise today, it made those put options, those options that are being used as protection for June 13th, it made them a lot cheaper than they were even yesterday. So I think hedge funds, institutions, some of them took advantage of that discount this morning. Now, short interest is not calculated from the market makers. So if you look at the total short interest, still sitting at multi-year highs at 3.79% with $18.5 billion currently sold short in the stock and 105 million shares that are sold short. You're not seeing the market makers, short positions on Tesla, right? They don't report their short position. So in all actuality, the short position currently in Tesla is higher than what you're actually seeing here. And if the June 13th vote goes the way that we think it will, and that is a yes approval for Elon's comp package, then what's going to happen is the market makers, they're going to be buying back a lot of stock in a very short amount of time. So the more kind of uneasy big money is, and the more they go out and hedge their positions now, between now and June 13th, the larger bounce that you likely get after June 13th when Elon's comp package is reinstated. Option activity today is actually quite bullish from big money. You have seen 9 orders totaling $1.96 million with a positive order value of 77%. Just to point out some of the options that I'm seeing right now, here is a June 20th, 2025 $300 call bought for $11.55 a piece. That's $1,155 if you are not familiar with the way the options are priced. And that would be a break even of about $312 or so, just to keep math simple. That is a $190,000 position. When you take a look at the next option, it is a December 18th, 2026 $300 call that has a break even of $336 per share, and that is a $356,000 trade. Now, when hedge funds institutions are going to the $300 strike, that means they're betting that Tesla sees a lot of upside between now and the middle of 2025, really about a year from now. They're expecting Tesla could double up from here. That's a lot different than some of the option trades that I've been reporting over the past couple of days that are deep in the money puts, right? These are not puts that are like the 150 put, the 140 put. They're not expecting big downside. They're not trading Tesla in that sense of expecting a lot of downside. They just want to hedge their position. And I mean, that's probably the best move if you are concerned in the near term about, you know, what Tesla stock might do, or if you cannot stand if Tesla stock falls. If Tesla stock falls to $100 per share, I mean, do you need that money over the next couple of years? Are you in a position to be able to weather that storm, for lack of a better word? If you're not, you should probably hedge. If you are, then you'll be fine without hedging. We do have some earnings coming out today and after hours that will be important, with Costco, Dell, Zscaler, Marvell, MongoDB, Ulta Beauty, Centennial One, NetApp, and Viva that will all report earnings, with a main focus on Marvell and Dell because those are your AI trades. Dell specifically has done very well ever since last earnings, when Nvidia gave Dell a big shout out. Your second estimate for Q1 GDP came in at 1.3%. That was exactly what the estimate was. So showing the economy's not doing, you know, nearly as great as it was before, right? It's still doing good. 1.3% GDP is still good. That's far from negative. That's far from, you know, talking about a recession at this point. But it's not the 3.4% number we had last quarter. So that is seen as good for the Fed. Maybe the Fed is able to start cutting rates sooner. And basically all of your numbers came in basically in line with estimates. Besides corporate profits came in negative 1.7% quarter over quarter for Q1. And the forecast was around 4% positive. So corporate profits just plummeted. And that could be another sign to say, hey, maybe the labor market will not be as strong as we think going ahead if corporate profits are not as strong as we think. You did have initial jobless claims that basically came in line with expectations, 1,000 higher than the 218,000 number we were expecting, but that really doesn't move the needle. That's basically along consensus. And we will have Fed Williams that, while we did have Fed Williams that spoke, nothing too notable came out of that. And then you will have Fed Logan that will speak at 5 p.m. tonight. Fed Williams said today Friday's PCE is important, but it's just one piece of data. Fed Williams also said, amid uncertainty about when rate cuts will start, it is unclear how much easing will be needed. He also said there are a lot of indicators that the job market is cooling to decent levels. Fed Williams also says rate hikes are not a baseline forecast. And he also forecast inflation to reach 2% in early 2026. He does also reiterate we don't need to be exactly at 2%. to cut rates. He says Fed policy is well positioned to get inflation back to the 2% target, and inflation is still too high but should moderate over the second half of 2024. And Fed Williams said monetary policy remains restrictive on economic activity, which is kind of a breath of fresh air considering so many Fed officials have been questioning whether or not the Fed funds rate is even restrictive on the economy yet. Over on StockTwits, sentiment for Tesla is bearish today at 39. Yesterday, it was bearish at 38. Message volume today is high at 59. Yesterday, it was normal at 52. And the participation ratio today is hitting a notable 54, which is considered normal, but a lot lower than where we have been recently. Google Trends data for the Tesla lineup continues to show a moderation, really sideways trading action in the number of searches you're getting for Tesla products over on Google. You did hit a high recently on the Cybertruck of 82. Now you're at 81. The Model Y went from 39 to 39, so no change there. The Model 3 is staying at 24 as well. No change there. The Model S went from 12 to 11, and the Model X is staying right at 10. So very strong levels of search trend activity that are not really going down. They're not really continuing to trend upwards, but this is historically abnormal to see this kind of search trend activity at this time of the year. Really, any time of any year, this is high search trend activity. So I think that's important to point out that the bears are definitely not going to talk about. Because judging off of Google Trends data, well, that would say Q2 is probably going to be a strong quarter and Q3 is probably going to be even better. We'll see if Tesla does take on the strategy of continuing to buy down the interest rate and see if we can get an extension to that 1% financing rate for the Model Y. If not, start offering that for the Model 3, the Model S, or the Model X would also be good. Tesla stock seems to be recovering at the time of recording this video, now up 1% on the day today, and I'm going to expect a lot of volatility heading into June 13th as the options market is going to be very active with not only people protecting their portfolios for the downside, but also people trying to trade to the upside. I think there's going to be a lot of action back and forth in the options market, and we'll talk about that a little bit more in the next video. I think tomorrow's data that comes out will also be very important for markets and can give Tesla quite a large move, whether higher or lower. You can see today Tesla stock got rejected around this 100-day moving average at about $183 per share. You did hit the low of the day at about $175 per share. Currently, you're at $178 per share. That's like a $8 plus round move today from top to bottom, bottom to top. I mean, that's kind of insane. That's a volatile day, and Tesla just kind of in the middle of this range right now. And it wouldn't surprise me if Tesla does continue to kind of trend higher into the end of the trading day, and just to expect a lot of volatility from there. Good news is today you are above that 20-day moving average at $177 per share. You have an RSI on Tesla of 52.41 and the MACD line, which is still positive, but the MACD line has broken under the signal line, which in the short term can be a negative signal. Let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.